Good morning, friends. Today we shall discuss something about depreciation as per Income Tax Act and as per Companies Act. I may make it clear that rates of depreciation are well defined in the Income Tax Act as well as in the Companies Act. In case of companies, each and every company is supposed to provide depreciation in the books of accounts as per the rates provided in the Companies Act, and its method of calculation is on days of use in that year of a particular item, asset, whereas in case of income tax, the method of calculation of depreciation is altogether different. If any asset is used during the financial year for a period of less than 180 days, then depreciation at half of the prescribed rate given in Income Tax Act shall be provided, shall be allowed, and if the asset is used for more than 180 days in the said financial year, depreciation for the full year shall be allowed as per Income Tax Act. The basic thing is asset must be put to use in the said year. And there is some confusion amongst some of my friends that whether charging of depreciation is mandatory or not. I may make it clear that in Companies Act there is a provision that every company is bound to make a provision of depreciation at the rates prescribed in Companies Act in the balance sheet. Whereas as per Income Tax Act, it is not mandatory that you must charge depreciation, but if we have skipped to charge depreciation in a particular year, it cannot be the strategy that next year depreciation for 2 years, last year as well as the current year, will be allowed, because as per Income Tax Act, depreciation is charged on the written down value as on the opening date of the financial year, and in case of additions on the asset as per the date of its acquisition and put to use.